Today we are talking with Ned Gellner, Corporate Payment Compliance Manager at the Research Foundation for SUNY. Good morning, Ned.
Morning, Linda.
So Ned, you're joining us today to teach everyone a little bit about compensation other than salary and wages. What is compensation other than salary and wages?
When we talk about compensation, typically we're talking about employees that are hourly or salary and receiving wages through the RF payroll system, or it could be an independent contractor paid based upon their contract, which is paid out of the RF accounts payable system.
Can you give me some examples of what kind of compensation would be other than salary and wages?
The items we're talking about today are things that they kind of may be under a radar. You don't realize they're there, but things like gift cards, which are under the IRS rules basically called cash equivalents, or allowances or supplements, where we're trying to offset some of the costs to an employee. Or it could be unsubstantiated business travel.
Ned, can you expand on some of these examples? Are there key characteristics that people should be looking for?
Yeah, to kind of walk through the key points. The first is cash or cash equivalents. Cash is always taxable reportable income, such as the example I gave when I said cash equivalents, a gift card. There's a dollar value amount. The IRS sees it as the same as cash situation. You're basically providing this individual cash. The next item to look at is if the payment or benefit item are expense or expenses the individual would normally pay for themselves. Then by receiving that benefit, the individual is actually receiving personal gain. That's another key characteristic of taxable item. Also, the benefit might not actually be provided directly to the individual. An example used often in this is maybe an employment agreement is made and part of it is to pay a child's tuition. That tuition is the benefit of the individual, but it's a benefit the employee takes on as taxable item. Last item to think about is businesses also at times provide items that may lend themselves to personal use. So again, the idea of getting personal gain from what it is. So this is typically business property made available outside the office setting, such as a company vehicle, or it might be computer or related peripheral equipment. The key in this situation is to actually make sure that there's complete documentation as to the personal versus the business use, because the personal use, almost in every situation, is actually taxable reportable income.
So Ned, why do you think this is an important topic for people to hear about during this podcast?
The main reason for this podcast is to make people aware that both at the planning and payment stages, activity could occur where we extend benefits that are not what I'll call the standard types of benefits, as I've kind of mentioned. And we extend those benefits, and we have to evaluate the tax and reporting implications. Basically, if we don't, it could end up in a non-compliant situation.
There's a new procedure for documenting this compensation other than salary and wages. So can you tell us a little bit about it?
Yes, we've released a procedure to help everybody know what to do. We also have a guideline which goes into all the specifics as to what is taxable compensation, what could be exempt, and basically the rule behind that is anything paid to somebody is taxable and reportable income unless the Internal Revenue Service provides a rule that exempts it or excludes it from income.
Who's impacted by this new procedure, or who would you recommend to be aware of it if it's not the same group?
Really anybody in the RF community. Could be from the pre-award to post-award. I work a lot with the people who are actually entering the information, such as the HR or payroll group or the accounts payables groups. But a lot of times they're the ones just receiving the paper to process at the end. Really, this could be right up front in the planning stages and project staff.
So you say in the planning stages. So when would this type of compensation come into play then?
It really could happen at any stage of project activity. It could be someone who's first got the idea of having a project, basically wonder how certain things that are paid or provided would be treated. A lot of times that question also comes down to what will the individual receive as far as a tax statement. It could happen anywhere along the process.
Is this something that maybe a human subject might be involved in? So a PI has built some kind of a research plan and they've put into their proposal that they want to compensate human subjects with gift cards or something like that.
Great question, because it comes up a lot. Because of the confidentiality of human subjects, there's different flexibility as to how you can remit payments for those individuals. Gift cards, as I mentioned as an example, is one of those vehicles that projects use. That situation is taxable reportable income. The underlying part to that is back to the rules that we talked about on what gets reported on a tax statement or not. Typically, if a person's a U.S. citizen, resident alien, they would get a 1099. The human subject's payment will be under the $600 threshold, so there may not be a reporting issue. The caution is if the person is a non-resident alien, because there is no reporting threshold, and there, on the non-resident alien side, is a 30% withholding general rule. So you have to be very careful when you're looking at processing things for non-citizens.
So you were talking about people being paid through the RF system, be it HR or through accounts payable. How does this affect the SUNY side of the organization?
Yeah, the focus of our discussion today is only on Research Foundation employees or even actually independent contractors. The IRS rules, whether it be an employee or independent contractor, the rules are the same, but the reporting impact for the Research Foundation is something we control. SUNY employees, there's a different tax and reporting impact, and we will be addressing that in future policy or procedures and releasing something at a later date.
So just in closing, Ned, could you recap some of the steps that people would go through in order to follow this procedure?
Yeah, we've talked quickly about a lot of different things, so I just wanted to give you a quick recap as to what would be asked at a campus level. So basically what would have to happen is first there need to be a need to identify this miscellaneous compensation item, and as I mentioned, it could be anybody in the RF community. Second will be to evaluate tax and reporting requirements. This is where the guidelines that we've published, and then the procedures, which would talk about the steps on how to do it. So that's where that will come into play. The guidelines will help you tremendously in evaluating the taxability or exemption to this. There's actually, and it'll point to 2 IRS publications that are the ultimate references to this. Third, you'll need to document it. We have a new fill-in form which is attached to the process, or think of it as being attached to the process of the procedure and the steps that you would follow. And in the end, if it's taxable and reportable income based on your evaluation, then we have to take some action steps to get the items into the appropriate business system. The actual step is to actually send it to the Research Foundation Central Office, which basically I'll be doing a lot of review to this, and then we'll figure out what's the best process to include it in business systems for tax and reporting.
So Ned, you've shared some really valuable information today, and I'd like to thank you for sharing that information with our RF community.
All right, thank you.
And thanks to everyone for joining us today. And we'll join you again on another podcast in the future.